Hey traders, Mike Sir here. Welcome to my weekly live trader psychology live stream series where I help you with the mental mindset. And today, what we want to talk about is why the mind matters in trading. And in fact, the reason why I am hosting this topic this week is I've actually gotten quite a number of students in the past month or two been asking me about this type of question. We've been going through a lot of technical analysis, looking at charts, looking at patterns, looking at indicators, and also we've been going in terms of fundamental analysis, looking at companies' fundamentals, fundamental catalysts, all that type of good stuff. But we really haven't gone through the part of where the psychology, the mindset, the causes or the reasons why certain traders make money and certain traders lose money. And it doesn't necessarily have to do with technical or fundamental analysis. So this is the reason why I want to talk about in this today's live stream is why the mind matters in trading so much. Like, and I'll kind of talk a little bit about before we go into the details is trading is a profession. It's a white collar profession, right? It's a profession where we utilize our mind to be able to make money. And besides the fact that we have access to capital or you're using your money to try to make more money, really you're not doing anything physically, right? I mean, you're obviously pressing buttons, buy and sell type of buttons, but what you're really determining is, well, when is it time to hit that buy signal or when is it to exit your position. So anytime that you're involved in a profession that essentially it's using your mind, it's a profession where literally when the market opens on Monday morning, for example, in the US stock market, and you have capital in your brokerage account, you have the opportunity, you have the ability to make money or you have the ability to lose money, right? When you trade. So that's why it's so important. The mind can actually affect your ability to make money or to lose money. And this is why in today's live stream, I'm going to go into more detailed. And for those who have attended a lot of my weekly live stream, this actually would give you just kind of a refresher why the mind is so important in trading. And it's something that we don't put enough emphasis, and this is the reason why I host a lot of these weekly sessions to be able to share my experiences and help you with the trader mindset. All right, let's get started. So just a normal disclaimer, please consult your financial advisor before making financial decisions. All right, let's get straight into it. So there are 5 things that I kind of want to talk about in terms of why the mind matters so much in trading. And the first thing is decision making. Okay. We are making decisions, especially if you are a day trader, you are making decisions on a second by second basis. You're making decisions on minute by minute basis, or you're making decisions on a day to day basis. So when you're making decisions, you want your mind to be clear. You want your ability to be able to process all this information. You need to determine, well, what price should I buy this stock at? What should I sell this stock at? What price should I take profit? Right? You're making a lot of these decisions, and sometimes, again, depending on the type of trader you're making split second decisions. So if our mind's not clear, if our mind is cluttered, if our mind is just not well, then it affects your ability to make money in the markets, right? So that's why sometimes, let's just say, for example, we feel a sense of pressure. We feel a sense of anxiety. We feel that we just have a bad day. And for you to be able to make split second decisions, think about that, right? You won't be able to make good decisions because your mind's just not clear. Your mind's just not there to make quality, decisions. So that's why your mind is so important, especially when you are making decisions, right? Especially trading decisions. Talking about what strategy, right? You have to kind of, if your mind's not clear, how can you think of certain strategies, right? Maybe certain market conditions require different strategies. So you have to be able to think through that strategy. You have to be able to execute on strategy. You have to be able to follow that strategy. And also, what about the size that you're playing? If your mind's just not there, you may be fearful. So then you don't play as much. You don't play as big of a size. Or if your mind's just way too loose, right? You're just too optimistic. You're just not thinking things through, that maybe you are trading too big of a position. So decision making is a very, very important component in your mind, right? So that's very, very important. That's where you have to be able to really ensure that your mind, again, clear, it's in a good place so that you can make good decisions. Second, human emotions, right? We sometimes have bad days. We sometimes have good days. So again, it affects your ability, or your mind affects your ability to feel specific emotions. For example, if you're seeing that the market is gyrating, again, I was trading at the peak of the COVID pandemic, March 2020. The prices were like insane. There obviously a lot of the prices are falling down, but I also saw extreme prices where prices would shoot down in a few seconds and then suddenly shoot back up. So if your mind just not, again, I want to repeat again, if your just mind is not in a good state and this volatility, you feel extremely stressed. You can't be able to trade those type of markets. For example, you're only able to, let's just say your mind's not in a good place. You're only able to trade in market conditions where nothing's moving much, right? Steadily going up or steadily going down or just basically going sideways. You have the ability to react. But when the markets are volatile, which some of you guys trade volatility or trade because traders really, we make money when things go up and down, but we can't make money when it goes sideways. So again, if your mind's just not there, you cannot take advantage of the volatility in the markets. And also, if your mind's not in a good state, when you lose money, it feels like the end of the world, right? Or if your mind's there and let's just say you do lose money, then you are able to interpret it differently. The losses might not affect you as much. Like for example, let's just say you got into a car accident, you had a fight with your girlfriend or boyfriend, or you've had a bad day, and then suddenly you're trading and then you lose money, right? That your mind's not in a good place. So how can you be able to trade? Because you won't be able to react positively or react in not a way where the losses that you incur would affect your trading decisions. So it could be, I mean, or in a other scenario is you're way too happy. Okay, you're too obstinate. You're very, very loose, and you made money. You've been making money. You're very, very loose with your trading. You're not really focused. You're very carefree in your trading. You don't practice a lot of risk management just because things have been going well. And then your mind is just, again, not very, very focused, and then suddenly your profits, and you take crazy risk on these certain trades, it results in a loss, right? At some point, right? Because you're so loose. Your mind's just not focused on trading. So obviously, in terms of the negative, emotions or the mind that you're in, the losses will obviously compound. But also on the other side, where you're just too loose, your profits will suddenly evaporate. Third thing, your current state of mind. Like I said, you had a bad day. Your mind's just very, very negative. Well, if you bring that negative energy into trading and you say, "Oh man, such a bad day. I had this wrong. I ate this, bad food, or had a fight, or things aren't just going well," and you try to trade, right? Your mind's just not in a good place. It's very, very negative. So, how are you able to make all these other things I talked about good decisions? Right? How are you able, in a good mood or in a bad mood, to be able to feel good about putting on certain trades? Right? So the state of mind that you're in is going to impact your trading. And you can say, well, I'm just trading based on these technical indicators and all that, and patterns, all that stuff. Yes, but let's just say those things don't affect you. You put on a trade, and let's just say it's going in your favor, and let's just say you're not in a great mind. Yes, suddenly the profit helps you, make you feel better, but then because of your negativity, you say, oh, you know what, I don't think it's going to go higher in my favor. I should just take a quick profit, right? Because I'm not feeling that well and all that stuff. But then that trade ends up keeps going in your favor, right? You exited too early. So again, the mind is affecting you, or the state of your mind, of your emotions, are affecting you on your trading. And again, I will tell you, perfect example. Again, I'm human. I made some decisions this week where, again, because I had a certain preconception, I wasn't necessarily feeling that well this past week, wasn't sleeping that well. I made some poor decisions just because I was so tired. I just wanted to get in, and then get out. And there was a trade that I could have kept holding, but because of the emotional state that I was in, I wasn't feeling well, I was just tired. I exited with just a small profit, and it actually became a big profit for me if I held. So it tells you it's not about just the technicals and the fundamentals that you are trading. Like, I was not planning to exit this trade. Like, when I prepared beforehand that I was going to exit at a certain price, well, I exited way before I hit that price. And in reality, it actually hit that price. But again, because of how I was feeling, my mind affected my decision. Even though I wrote down, I said, I'm not going to take profit until this price. But I did. Right? So that's why, we're always trying to fight our mind, right? Or we're always trying to go against ourselves, right? And you may have heard the saying, the biggest challenge in terms of trading is actually has nothing to do with market, or not just anything to do with market. It has nothing to do with your lack of knowledge, your experience, all that stuff. Sometimes the greatest challenge in life is actually yourself. So that's why, again, the mind is so important. Again, when I said here, your current state of mind, if you're too happy, too optimistic, then you're loose, right? If you're sad, then again, it affects your judgment on certain trades. If you feel anger, right, you just want to, you're angry on a certain trade last trade that you made, you want to try to make it back. Again, revenge trading. Or impatient, right? You've been waiting all day for a trade, no setups, and you want to make money, and so you put on certain trades, but You shouldn't, right? But again, that's where your mind is affecting your trading. If there is no a setup, or if there is nothing that you feel confident in terms of trading, you shouldn't trade. So that's why the mindset is so important, because other aspects are affecting your trading decisions. Next thing, the markets are constantly changing. Right? We've been in the bear market, or we've been in the bull market the past few years, or we've been in a volatile market, or we've been in a slow market, or we've been sideways market, right? Constantly changing. And if you're not adapting to the market, then you're going to lose, right? Let's just say past year, or since the beginning of 2022, markets have gone down. If you're just looking on only buying, then the chances are you've probably been losing money. Just recently, the market, especially at the beginning of this year, has gone back up a bit, right? But if your mind is not adjusting to the market conditions, then you're losing money. And this is where, if your mind is only fixated, okay, you hear about all the recession, you hear about all the things, inflation, you hear about the debt ceiling, you hear so much negativity, your mind is in a negative state. So then, why would you be confident in buying this market? But if you look back at the charts, the market has, since the beginning of this year, has been going up. So again, your mind is affecting your ability to make trading decisions, pardon me. But if you just purely remove the mind and you just look at the charts, yes, it is going up, right? I've been working with quite a number of students, and they say, well, is the market going down? There's so much negativity in the media and all that stuff. No, what the charts are telling you, the charts aren't lying. The market is going higher. So again, that's where you have to look at the fact that the market changes. There are market cycles, right? There is what we call accumulation phase, markup phase, distribution, markdown, and then accumulation, right? So you have this up and then you have this down, right? So it keeps repeating. So your mind has to adjust to these market cycles. Your mind has to adjust to the market environment. So the market is volatile. Let's just say it's going crazy up and down. Well, your mind has to be in a good state for you to be able to take advantage of those volatility, right? Or if your mind is very, very impatient, right? You're lacking patience and the market's not going anywhere and you're forcing trades, again, you're putting your own emotions, you're putting the state of your mind, you're putting all the things in here and trying to get the market to act according to how you are thinking at that time. No, that's not the way, right? Unless you have the ability to move markets. So that's also why when the market changes and the market reacts in a certain way, your mindset also has to change. Okay. Last thing, a few things here. We always, I get always asked, hey, Mike, what do you think the market's going to do? I don't know. If I had the ability to predict, right, I wouldn't be here, right? I'll be able to predict the future. Now, obviously, I have an opinion, right, where the market is going, right? I have certain biases, looking at the charts, looking at the fundamentals, looking at how the market is reacting to specific news and policies, all that type of stuff, right? But also, we don't want to be stuck in a predictive type of area, because I learned very, very early on, well, we all know we can't predict the markets, but however, we always try, right? Oh, I think that the S&P is going to close around this area, right? It's just kind of nice to have, right? Nice to be able to predict things. But what I'm saying is when your mind is trying to predict something, you're predicting something that you just don't know, right? So that's also where you can get in trouble, where you're so fixated about your prediction that you think the market's going higher. You basically don't see the fact that the market is going down, right? Because your prediction is only focused on going up. So that's where we have a blind side, right? In terms of when we're thinking. And I'm guilty of that too, right? I have certain cognitive biases, right? Of what the market's going to do, for example. Now, obviously, I look at the charts and okay, I have a certain bias, right? It's going higher. But sometimes I have to let the market tell me. But because sometimes, when we're so focused on a certain direction, that I think this company is going to do well, or this company's price will come back up and all that stuff, right? Predictive type of behavior, but it's not reflective in the price. So that's where, again, the mind is so important. Your analysis, right? In order for you to interpret the charts, in order for you to interpret the earnings, the news, Fed policies, inflation data, all that type of stuff, we need our mind to be able to be clear so that we can analyze that to the best of our ability to make better trading decisions. But again, maybe we're exhausted, maybe just like our mind's tired, due to whatever reasons, we can't think clear. So therefore, because you can't think clear, you can't make better trading decisions, your emotions are at a low point, your state of mind's just not in a good state, market's constantly changing. How the heck are you able to think clearly, to be able to extract profits from the markets? You tell me, right? So that's why you need to take care of your mind. You need to ensure that you're able to perform all these duties, all these analysis, all these things to make good trading decisions. And again, lastly, I'll talk a little bit about this already. Catalyst, right? You got to be able to interpret what is going to trigger the market to move higher. Oh, okay, the earnings were good on this company, but yet the stock's price is not going up. We need to be able to be clear in our mind that, hey, the market is not agreeing with these good earnings, or maybe the market's already looking forward to next quarter's earnings and it's already discounting the current quarter's earnings, right? So again, your mind needs to be able to interpret this, right? The market's going up, but yet your stock that you're holding, the overall market's going up, but the stock that you're holding is not going up. Well, what is it telling you? Well, it's telling you that in good markets, your stock's not going up. Well, what if the market turns down? Do you think your stock that you're holding will go up, right? Probability is quite low. All right, guys, I will open the floor to any questions that you guys have. Please type your questions in the question box. And again, questions related to the mind, okay? All right, Richard. Hi, Mike. Hi, Richard. Okay, Trader Kashi Malik. Hi, sir. You're looking good. Thank you very much. I think mind is a very, very important thing in trading. How much time required to master mind issues? I don't think it's a matter of time. And again, I'll just speak from my experiences. Okay. Been trading for 20 something odd years. I am no expert in terms of mind, and it's just a lot of it's through experience. I've read a lot about psychology. I read a lot about how emotions affect your decision making, and A lot of the books I read, a lot of things that I read, it's not about related to trading. It's related to be able to make better trading decisions. So I would say it's not a matter of time. It's getting to a place where your mind is clear. Like I said, a lot of this in my live stream in today is put yourself in a situation where you can think clear, right? Where there's no distractions, there's no certain things going on in your life, or negativity, positivity, or things that affect your ability to make good quality trading decisions or decisions in your life. Like imagine, think back to where you made some poor decisions just because the state that you were in wasn't the best. And then think about the time that you made some really good decisions, right? For example, maybe buying this stock or buying this investment that has gone up. Think about your decision making at that time. Maybe you were very clear. Maybe that's why your mind was able to interpret all this data, interpret all this analysis, allowed you to be able to put on that investment. Or sometimes where you missed out on an opportunity. Well, why did you miss out? Well, maybe because you had a fear of losing money. You weren't sure. You maybe didn't do enough analysis, or maybe just the state that you were in was not focused on making money or investing or trading, and you missed out. So that's where your mind was so important, right? Because you missed out on an opportunity because you weren't ready. Right? Your mind just not ready to be able to interpret and make decisions, and the state that you were in, you weren't able to see things clearly. So think back to when you made some good decisions, when you made some bad decisions. What state of mind were you in at that time? And there's sometimes where, like, if you were to ask me, like in terms of going back to where I was training traders in the morning, right? Traders here on the West Coast, you have to wake up early, right, to trade the U.S. market. You're just not awake. So if you're not awake and your mind's just not awake, not clear, your performance is just not there. And then you're trying to make money from the markets. It's pretty tough, right? Okay, Gabu Bots, yes. Hey, what's up? Evan, how do you avoid the mind trap of confirmation biases tied to your own convictions and predictions? Very, very good question, Evan. It's not easy, right? We have specific things from our background, right, or through our experiences that lead us to think in a certain way, right? For example, like I'll talk about, I am a gold bug. Okay, I been exposed to gold as a very, very good investment, right? And I've been taught through my family before that, gold is a hard asset. It's a safety. It's a asset that over time will not decline value. Or for example, or talk about real estate, right? Real estate over time, especially if you own land, will not go down in value. And also through your experiences where I was trading gold in the early 2000s, 2003, and I made money through gold, right? Or people made money through real estate. But then the market crashed, right? Or the real estate market crashed, right? In 08, right? And we've seen the market, overall real estate market decline in 2022. So through our experiences and through how we think, it's very difficult for us to change our mindset, right? That gold and real estate aren't good investments, right? It's hard for us to think that way because of our previous experiences, the previous success that we had. So the way I guess you can sort of look at it is you have to kind of put your emotion, put your biases aside and see, hey, logically, is the market agreeing with me? So when I said to you, I was a gold bug. So when prices of gold stopped rising and started falling, I couldn't change my bias. I still believe that will go higher. But if you look at a chart of gold over the past 5-10 years, it hasn't really appreciated that much, right? It's not acting as an inflation hedge. It's not acting in a way that I experienced before. So some of the ways that I chose to, after repeated losses, right, in terms of holding gold, right, or trading gold equities and companies that I made money before, I just didn't trade it. I just didn't focus on that area anymore. So that allowed me not to have any biases, right? Because I wasn't trading it. So therefore, I was just ignoring that part. And I just focused on certain things, certain biases that I believed, right, would go in a certain direction, and to have the market confirm that. So that's one of the things that I did. Obviously, if you do want to overcome these biases, you need to. It's not easy. Okay, it's not easy. You have to remove that component. And I have some students who fall in love with a specific company, right? I have a gentleman who loves Tesla, right? And cannot see anything negative about it. And that's where, when things are going well, it's great, right? He's a genius to be able to hold on to Tesla. But when you are holding on to something, you love something too much and it's not going in your direction, you have to look at yourself. Well, what's the bias that you have? And you have to remove that. If you can't, then you just don't trade that particular stock, or don't trade that particular sector. Okay, Sherry says, lost money and fearful. Yeah. That's, again, lots of people don't focus on the mind and get to a state where the mind, again, is not affected by other things that are going on in your life. And it's not always about X and O's. It's not about always looking at the charts. It's not always about fundamentals. You do need to spend the time to really focus on yourself. And that's also, in some of my live streams, I talked about the mental health, and that's the part. You have to focus on yourself. It's not, you need to continue improving your trading skill. You need to improve your trading knowledge. You need to, improve all these type of things that can be learned, but you don't focus on the most important, because you are the key decision maker in trading. So if you're not focused on your own mental health, then your trading could suffer. All right, Richard says, I have to ask, having a strategy that loses between 2 to 4 months of the year, remaining months are winners, is that a sustainable strategy long term? Okay, well, I've had students who only trade specific time periods of the year. For example, I have some students who only trade earnings. So every quarter, there's an earnings period. They just focus on, because that's a period of time where there's volatility. And if they trade volatility, great, right? And there are time periods in the markets that aren't volatile, right? For example, I can tell you that beginning of the year, lots of volatility, right? First 3 months. Then you get into a bit of a lull, right, with the summer, right, because everybody's more out, not necessarily staying in front of the computer that much, even if you're trading, or even the professionals trading. And I'm saying that if there's no negative news, there's no positive news, there's no catalyst, then you see summer months, right, start to slow down, and especially in August, right, because the big boys on Wall Street take their vacations. A lot go to their summer homes, vacation homes. So you'll see lesser volatility in the markets, lesser volume. And then you get back, in the fall, and then again during Christmas time, right? So there's nothing wrong with you only trading specific periods of the year, or there's no wrong in terms of trading a specific strategy in a specific type of market, because sometimes it's not about how much you trade. It's if, like, I have some students before, they've only traded 3 months of the entire year, but in that 3 months they can make the returns equivalent to entire year's profit target. Then why do you need to focus on the 9 months of the year, right? And there are time periods where some traders only trade bull markets, right? Markets are going up. Well, in 2022, you could take the whole year off, because if you're just trading a bull market, you'll be losing money. So why would you trade a market that you're not familiar with, right? So nothing wrong with that in terms of, just if the strategy that you're employing is working in certain type of markets, keep at it for certain parts of the year. And if you notice that certain parts of the year it doesn't work, then either learn a new strategy that works better in certain market conditions, or just don't trade. Okay, last question here. Trader Kashi Malik. Means experience are needed to master these things. I already made so many bad decisions because every time I think I learned everything, but at the end I liquidated my account. Okay, so what you're saying is that experience. Well, first of all, I will say experience. Having trading experience doesn't mean that you're going to make money, right? Even having like good experiences doesn't necessarily mean that you will succeed in trading. Sometimes experience can actually make you worse, because you go back again. This is where I'll relate this back to the mind, where if you had a bad experience trading this specific stock, would you trade it again? Or would you trade well in this particular sector or stock that you lost a lot of money in? Probably not. I had one student trade one specific area, been holding on to losses probably down over 90% in this one position. Can't even look at that. Can't even look at the stock, or can't even look at the charts of this particular stock or specific sector, because the experience that she had was so negative, couldn't even deal with it. So, but if you think back, logically, it doesn't make sense, right? But it's because of our bad experiences that lead us to avoid certain things, right? Which makes sense. Now, let's just say you had good experiences making a lot of money. And I'll tell you an example. I made a lot of money in gold in the early 2000s, right? When gold was under $1,000 per ounce, rolled it all up. But then prices never went higher, right? At that time. And over many years, it didn't go higher and actually trended lower. Now, I had a good experience trading and making money in gold. So obviously I kept sticking at it, but in reality, it wasn't a good asset class that I should have been focusing on. I should have been focusing on, especially after 2009, 2010, right, with Bitcoin and all other stuff, right, crypto. But hey, I didn't understand it at that time, and I just focused on gold. That's what I had success with. So again, that's where your mind is obviously gravitating to things that you had good experiences, but sometimes those good experiences don't necessarily translate into future success, right? Or future good experiences, or things that we had bad experiences doesn't mean that it's always going to be bad, right? So that's why we got to really understand and not let a lot of things, especially in our mind, influence our decisions. All right, guys, thank you so much for attending today's session. Next week, I am going to talk about stress management. Because trading is, in some sense, depending on how you approach it, depending on how active you are, is not the most relaxing profession, because every decision that you make, there's no guarantee. It could result in a profit, it could result in a loss for you. So if you are in this profession where it's constantly changing, there's no guarantee of profits, all the time that you're spending into this activity doesn't generate you a guaranteed form of a profit or return or success. How do you manage this, right? Obviously, you will have some stress. So next week, I'm going to talk about that and some ideas to give you where you can not necessarily have a no stress trading environment, but a lesser stressful trading environment. All right, guys, thank you so much for joining me on this Sunday, and I will talk to you guys next week. Have a